I'm with Matt Zamin of Kingsview Financial. We're going to take a look at a more macro view of the market, beyond earnings, beyond the fiscal cliff and the debt ceiling, and a relatively low VIX in a range-bound market. Matt, how are you positioning your clients? Because it's been a really tough tape to trade if you're trying to gauge the top or the bottom.
Absolutely. A lot of back and forth action right now. Really not much going on. Looks like we're finally getting the breakout to the upside today that a lot of people have been expecting. So as premium collectors right now, we're generally sitting on the sidelines, actually. As you know, volatility really coming in over the last few weeks, and we don't suspect it's going to remain at these depressed levels. So we're kind of biding our time, wait until things pick up, and we suspect over the coming weeks, going into the final debt ceiling negotiations, that we're going to see that VIX start to creep up again and see some tradable opportunities come back into the market.
So with the VIX at such low levels, it looks like a good opportunity to buy some insurance cheap. But you were saying that you look to collect premium. What strategy do you focus on?
We generally look to collect premium across a basket of various commodities markets. Obviously, we like to trade the S&P, we like to trade the crude oil, metals, currencies, ags, you name it, we're there. We generally will stay out of the less liquid markets, things like the lumber, the cotton, that type of stuff. But we feel that by spreading out our risk across a basket of commodities like this, we're going to increase our odds of success, and we're going to have more tradable opportunities when implied volatility in those particular markets starts going through the roof.
Let's focus on some individual commodities. I want to take a look at the ags. We've seen such significant runs in names like AGU, Monsanto, Mosaic, one of my favorite picks for 2012 and into 2013. We see some really nice, healthy call action in there. In particular, do you think the ags have run up a bit? The bean complex, the corn complex, they're pretty high levels right now.
They're at very high levels right now. Looking at the futures here, vol has come in a lot on the futures, obviously following the report last week, continues to trickle in right here. So corn, I think you're looking at a range-bound market. Beans, we've been working back to the upside a little bit, but I think you see things start to really settle down a little bit, and some of that upside pressure is going to continue to come out of the market. So again, we're kind of sitting here biding our time, waiting for some tradable opportunities to come up, and it's only a matter of time.
And finally, are you getting a sense from your clients that there is some frustration? People don't know what's the good entry point. You know how hard it is to pick a top, to pick a bottom.
Absolutely.
What are we waiting for? I know we have the debt ceiling. I just feel like we're kicking the can down the road to the next event, but it's pretty overbought.
It is overbought, but that's also how you make money, is by being patient and waiting for those opportunities to come up. So a lot of people arguing that the SPOOs are overbought here, but we continue to climb. And the fact is, the market is always right. So regardless of whether or not I think we're overbought here, the trend does remain higher, and you have to play it accordingly until proven wrong.
Well, I certainly think a lot of traders believe that this market's going from a churn market to certainly a trend market. And right now, we're going to the upside.
Yep.
All right, thanks, Matt.